What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Wei Li, Global Chief Investment Strategist at BlackRock. This week, we discuss signposts we're eyeing to evolve our pro-risk stance if necessary. We think U.S. equity gains stay strong, yet an economic transformation and global policy changes could spur volatility. That calls for outlining triggers for adjusting our views. First, we're focusing on how U.S. trade, fiscal, and regulatory policy changes take shape. In a market-friendly approach, rolling back banking regulation could boost economic growth and risk asset gains. Efforts to reduce deficits could encourage other countries to loosen fiscal policy. Yet plans to extend tax cuts plus broad and large-scale tariffs could support markets less by bolstering deficits and inflation. Tariffs also tend to strengthen the US dollar, fuel inflation, and call for high-for-longer interest rates. That is at odds with President-elect Donald Trump's calls for a weaker dollar to boost U.S. manufacturing and his push for rate cuts. We're also watching how investor sentiment could respond to corporate earnings results and lofty tech valuations. We expect earnings growth to keep broadening beyond tech. Yet the Magnificent Seven are still expected to drive overall earnings. Any earnings disappointments could renew investor concerns over whether big capital spending on AI will pay off and if high valuations are justified. Finally, we're monitoring vulnerabilities in public markets, including an already jittery bond markets. It's unclear how well markets can absorb the record U.S. Treasury issuance that has helped drive term premium to its highest level in a decade. The refinancing of corporate debt at higher interest rates could challenge the business models of companies that assumed interest rates would remain low. Here's our market take. We upped our overweight to U.S. stocks even more in December as we expected AI beneficiaries to broaden beyond tech, with support from resilient growth and Federal Reserve rate cuts. We see U.S. equity performance cooling from its highs this year, but still staying strong, while U.S. Treasury yields would climb due to rising term premium. That supports our overweight to U.S. stocks and underweight to long-term treasuries. For details, read our market commentary on a weekly basis. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you have enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com